equipment all over the place. Give it a minute to get going everywhere. You have any
Yeah.
fun plans for the weekend?
No, not really.
No.
I really don't think I have anything. Oh, I got to do lawn work. That's not fun though.
Lawn work. Well, I mean, if
Yeah.
it's not so hot, it's okay. If it's hot and gross, it's not so nice. But um, I just have like some birthdays and a wedding and like lots of
I don't know.
stuff's going on. A
No,
lot of
we had to
fun
go to
time.
Miami yesterday. Did a broker's open at a $20 million house. Um,
I'll take two.
yeah, we've been there. Funny enough, we've been there before. They dropped the price 7 million.
Aw,
So
don't you feel
yeah,
bad for them a little
yeah,
bit? That they
awful.
awful.
The couch is 50,000. Their couch in the living room is a $50,000 couch.
Are you not allowed to sit on it?
I'm not going to sit on it. I'm not taking the chance. I'm good.
That's so funny. All right, should we get started and like
I'm ready.
you're ready?
I'm
All
ready.
right. Cool, I'm ready too. Hey everybody, I'm Bet Hochberger, CPA, CGMA, and today we have Mike Collada joining us. Mike is a, a brilliant mortgage guy to help those of you who are not on W 2s, which I know from my own experience can be a little bit hairy sometimes if you have your own business. So, Mike, do you want to introduce yourself a little bit
Sure.
more in depth than I did?
Yeah, absolutely, absolutely. My name is Mike, like she said, from On Mortgage. I've been in the mortgage business for 19 years. Actually, this month was 19 years in this, so a lot of experience. It's all
Wow.
been in the South Florida market. Um, been doing tons of condos since the day I started. Really got involved with self-employed borrowers probably 5 years into my career is when I really started focusing on that and understanding how it worked. And over the past 4 years, we have moved away from the banks and direct lending, and now we have our own broker shop. And that's really given us the flexibility to open up mortgages to pretty much anybody who's self employed. And again, that's what I mean by self employed anybody who's not on a W 2. So 1099, K1, partnerships, 1065, whatever you're on, there's a way to make it work. And there's a bunch of different options for it. So that's the number one thing we hear is, hey, I'm self-employed and I write off all my income. I don't think I'm going to qualify. And my first thing is, well, let me see what you have and let's go from there. So,
Right, right.
that's one of the things that we really specialize in is those difficult, self-employed borrower pro situations where somebody's buying.
And it's always interesting to me because I can tell when somebody's working with a mortgage person that doesn't know how to deal with business owners because they're always freaking out. They're like, "Oh my god, I don't put enough on a W 2 or I don't have a W 2." And
Right.
I'm like, "Ooh, maybe you need to talk to somebody else because I know that that's not the case. That I know a few mortgage people that work with business owners, and there's really a difference, right? So
There
who
is.
how does somebody to get to you? And if they're talking to somebody who's like, oh, you need to have a W 2 or we can't do anything, like how do they get out of that? Are they committed at all once they
No,
start down that
no,
path?
they're never. What I always like to tell people, and even on my transactions, because I'm very transparent and open with everybody, you're never committed to anything in the process. The contract is one thing. If you sign a sales contract, yes, you have a legally binding contract. You have commitments to meet in that contract. With regard to the financing side of it, you don't lock anything in until the day you close. When those notarized documents are done at closing, that's the day everything counts. Up until that point, you have flexibility. You can shop different mortgage company, different title company, different insurance agents, you name it. So you're not
That's good
bound
to
in.
know because I think
Yeah,
people think like once they start down that path that they're like they got married, like there's no getting
absolutely.
out.
Because what happens is when we send out loan disclosures, there is a 3-day legal requirement for us to send out disclosures. And the customers get them, and some every now and then there's an error on a name spelling, or hey, that number for my bank account is off a little bit. And I always, I say you still have to sign that. You're not binding yourself to what I've given you. You're just acknowledging that I've sent you what I was supposed to send you, and you've received it. That's all that is. You're just acknowledging receipt of documents. So there is a misconception that people have that once they start with someone, they're stuck with them, and that is not at all the case. You can definitely shop around.
Yeah,
Um,
and it's good. I always think it's good to shop around for everything,
for
right?
sure.
Like, you're not necessarily making your decision 100%, and anything. I don't just mean mortgages, like anything, just on the price. But see what else is out there. Like, don't just take the first person you talk to and be like, oh, that's it.
Yeah, and honestly, one of the things, I mean, customers are pretty smart these days, and especially with online
Yeah.
access, they can shop around quite a bit. But the one place where I would really recommend that people don't ever think about it is the title company. There's a title company that's put on that sales contract, and everybody thinks, and typically it's going to be the realtor who they have a relationship with. And and we do this from time to time because sometimes I'll see a title, settlement fee, $1,100, $1,200, and I'm like, you need to shop around. Most places will do it 695, 795. You're paying extra money just because that realtor is being loyal to their people, but they're not
Ah,
serving you it's not your best interest at that point.
right,
So
right.
that's one place to really shop around as well. So that's one thing about our company is that and I'm sure a lot of people will say this, but we're all about making sure that the person that we're dealing with is happy at the end of the transaction, that we've made sure that they've gotten the best deal, not just from our side of it, the title company, the insurance agents, everything that they're working on that we've steered. I don't want to say steer because I know there's anti-steering, but we've given them the
Guided.
yeah, we've given them
Advised.
the tools. I'll give 3, 4 insurance agents contacts. Hey, go shop with your own, but shop. See what you're going to get. Don't just go with the first one. And again, we talk about that with us as well. You can shop us if you want. We're very fair. We're very very fairly priced with how we do our mortgages. So always confident that we're going to get the deal in. But the one thing that you cannot put on paper numerically is the experience that we bring, which is the biggest part of this conversation today. Is that, I mean, and I can give you a real world example as of today. We have a customer who shopped with us. I ran the numbers. She's self employed, and she wasn't really happy with the income figure that I gave her because it doesn't get her qualified for the house that she wants. And she went over to one of the big major US banks, and they are promising her the moon and the stars. They're going to get her closed, and they can give her exactly what she wants and this magic rate that doesn't exist.
No
And
way.
I know, and the realtor knows that what she's been promised is not going to work
Right, right.
because again, she's self-employed, and you have to understand that you have to be educated in how to run the numbers in order to make sure that person can
Yeah.
eventually get to
And
closing.
so many people don't know, so many mortgage people don't know how to do that for
Correct.
those
They rely
folks.
a lot of them, and again, being 19 years, I've come across them. I've
Seen it
worked
all.
with them, where they compile the documents and then hand it off to an underwriting team and expect them to now figure it out. And that's a big difference with the way we operate. Is that I'm very thorough up front. I'm not going to have you sign a contract if I'm not confident I can get you closed on that property. So I do review everything very, very thoroughly up front to make sure if I give a pre-approval letter and my name's on that, you're going to close that deal. You're going to buy that house. So that's a big thing for us. That's a lot of people are very surprised sometimes. They're like, you asked for a lot of documents versus somebody else. I'm like, but I've asked for everything that we actually need. There's a big difference. And again, going to a real world example, a customer that I have closing on Monday, he owns a lot of properties. He earns his income as being a landlord, and it's a complex file. And surprisingly, as many properties as he owned over the years, this is the first mortgage he's ever gotten. And
Wow, that's impressive, actually.
he was very surprised in the very beginning how many documents I asked for.
Can you give
And
us some examples of what kind of documents you're
sure,
looking for?
absolutely.
Because documents is really vague.
Yeah, in this particular sense, I mean, assets are pretty straightforward. You're going to get bank statements, so you're going to be looking for checking savings accounts, investment accounts, retirement accounts. Those are primarily what we're looking for in terms of assets. Income's a little bit more involved. A W 2 employee is very straightforward, though. You're going to ask for the most recent 2 years W 2s, copies of the most recent pay stubs for the past 30 days. That way we can get an idea of the overall, of what they're making. Because they're on salary, typically it's very easy. If they make commission or bonus, we do try to get like an end of year pay stub from the year prior just to see what the overall bonus or commission was. And we'll do verifications of employment, just have the employer verify that as well. So, but it's a very easy process. Now, with somebody who's self-employed, we'll be asking for, obviously, they're not going to have W-2s. They're not always going to have pay stubs unless they do pay themselves on a regular cycle. Primarily, we're going to be looking at the previous 2 years' tax returns. Um, if you have anything on Schedule E that shows up as a K1, we're going to ask for all of those business returns. Even if you showed zero, you filed. If there's something that was filed, I need to see it. If it's $2, you filed something. I need to see what that $2 was, and that's not always a bad thing. Some customers get frustrated because they're like, I was only $2. It's like I understand that, but what
Gotta
do
see it.
and you'll know about this, Bet. What do you put on that first page? Depreciation. Depreciation is something that offsets a lot of people's income.
Yeah,
I can
yeah.
add that back in. I can
Right.
use depreciation because it's not a true loss. It's
And
not a
it's
true
so
expense.
nice to hear you using like the actual like tax form names. Like you actually know what you're looking at. I have dealt with some mortgage people over the years for clients where I'm like, "Are you stupid? Like, are you dumb? Do you like you don't even know the lingo of like what you're looking at, let alone how do I read what I'm looking at?"
Like on an 1120s line 19 where it ends up going to statement one and I look for amortization or casualty loss, I can add that back in. I know the tax returns. I don't know how to do my own taxes, but I know how to read other people's taxes. We're going to be, a section L, line 16, any notes due prior to a year. There's certain things that we look for. It's section M, 4B, I think it is, for meals and expenses. There's stuff we have to look at there. So I know where to look at the tax returns. And it's not always a bad thing when we ask for that. We're trying to maximize what
Right,
the
right.
income is. So, again, people get frustrated at times because it is a lot of paperwork as a self employed borrower. But it's to, again, maximize and confirm that we have the correct numbers. It's
Yeah,
really
that's
important that we get
fantastic.
there. So, again, like I mentioned, we can add back depreciation. That's a great line item for a lot of people, especially now. You get some. I have one gentleman that we work with. He's a return customer of ours. For his business, he bought a yacht, and he depreciated the entire thing one year. And you carry over to the 1040, and it's like you didn't really make much. You start to review the business return, and it's like you have millions in depreciation that I can add back in. Now all of a sudden we
Oh,
went from
that's
having
fun.
next to nothing to now we have plenty of income to qualify.
Right,
So
right.
again,
Yeah,
it's
that's a big one. And I always tell people who come to me and they're like, "Oh, I don't want to take a lot of deductions because I'm trying to buy a house." I'm like, "You need
right.
to talk to someone like Mike that does mortgages with people who have their own business because what you're worried about might not be um, the right thing to worry about." But
Correct.
like if you have something depreciable, it might be okay. It's yeah, it makes your overall income look lower, but for what they're looking for, you need to know really like what numbers matter and what don't, and you might be able to deduct more things than you potentially thought in the first place.
Correct. And even for somebody on 1099, that's doing Schedule C, business mileage. That's another great example. I don't know. I always kind of stick with the 52-cent thing. 52 cents per mile. We can add back 26 cents per mile. 26 cents. That half of it is considered the depreciation, so it's not a real expense. It wasn't something that actually went out in the form of a payment, so that gets added back in. So there's some professionals who add a lot of mileage into their schedule in the Schedule C,
Yeah.
and we can add that back in. And you'd be surprised. Sometimes
Yeah.
maybe it's $150 a month that we get out of it, but at the end of the day, sometimes the $150 is the
Make a
difference between
difference.
qualifying and not qualifying.
Yeah.
So, again, that's what we're looking for. We're really digging in and trying to get all of that put together. But then we also have the ones who that's just not going to work. They write off so much in other places that it's just not going to work.
uh,
So that's where we get a little bit more creative. And it's a world that a lot of people don't know about until they come and talk to a broker because banks don't do it. Direct lenders somewhat do it, but it's not what they specialize in, which is called non-QM lending. It's non-qualified mortgage.
ooh,
So what that means is it's not your typical Fannie Mae, Freddie Mac, big bank jumbo type loans. They have a little bit more tolerance to risk. So instead of qualifying using tax returns, we take all that and put it to the side. I'll give examples as we go along, but one of the most popular is a business bank statement loan. And what we do for a business bank statement loan is, so long as you own the business, we can take gross deposits over a 12 or 24-month period. We average those gross deposits out. We back out an expense factor, which is typically 50%. And once we do that, that's going to be their qualifying income. So we're essentially creating qualifying income based on what deposits come into the business.
That's so
And
interesting that you
and
can
it's
do
actually
that.
it's more of a true representation, because again, if somebody has a 50% expense factor, that's pretty fair. You figure that's supplies, materials, whatever their actual marketing expenses, whatever it is. The other 50% may just sit there in the bank.
Gotcha,
So
gotcha.
that is truly income, but they're just not reporting that as income on the return in a way that we can use it.
Interesting.
So
And what are the rates like for something like that? Are they a lot
for
higher?
the
Or?
no, yeah, they're definitely higher because they do involve more risk. Because at
Right.
that point, you're not using traditional methods, and it's also a niche product, so
Yeah.
they can get away with getting a little bit more. Bank statement loans, you're going to be looking probably about 1% to 1.5% higher in the rate. But what's the advantage? 'Cause sometimes people balk at that. It's like, oh, it's so high. But would you prefer to file your taxes, pay all of your income tax, and get the lower rate? Or would you prefer to avoid paying all your income tax, do it the way you do it, and take the little bit higher rate? And
Well, but like 1.5% is not that
no,
much,
it,
really.
it's
I
not that
guess
bad.
like a percentage as a percentage of like when it's been so low
Right.
seems high, but as the rates have crept up a little,
But when you do the math on it, when you show somebody, okay, well, let's, and we've had people who have done it because they're in the middle of tax prep. It's like, okay, prepare the taxes the way you normally would, and then prepare it with what you need in order to qualify for this mortgage that you want. And I'll give you both rates. And when they see how much they have to pay in income tax, they're like, we'll take the higher rate. But also on top of it,
that's so
you'd be
interesting.
better to confirm this. I had one borrower years ago who he multimillionaire. I mean, guy's buying a mansion that drives a Ferrari, legitimately drives a Ferrari.
Nice.
And I saw his tax return; he made $41,000.
Yeah, it can
And
happen.
yeah, so
That's some good
we
tax planning right there.
yeah, we ended up having to do a bank statement loan with him, but his tax return year over year was like 40,000, 42, 41. It was always right around that area. And he was like, "Oh, well, I'll just change my, this year I'll file and I'll just, make enough that I can do a regular loan." It's like, okay, well, don't you think the IRS is going to be curious why one year out of all the years that you file, you made like, $1 million, but every other year you made like 40 grand? I think they might be like, hey, let's take a
It's a
peek at
little
this.
suspicious. I mean,
Yeah,
if
it's
I worked for the IRS, I'd be like, "What the hell happened?" And
yeah, and it
what's
just
going
happened
on these other years?
yeah, it just happened to be the year that you bought a house. That might be a little,
Right. A
a
little
little
suspicious.
sketchy. So,
Right.
again, it's one of those advantages that where they don't have to change the way they file. They can still go out and do, get what they want, and it just makes it for easy qualifying. So again, that's the bank statement loan. Um, Again, taking the 12 or 24-month history, averaging it out, taking out an expense factor. 50% is the default. If there's somebody that's a realtor or somebody who has really low expenses, we can use a 20% expense factor to give them a little bit more income. So again, great program, very popular. We do tons of those. I have 3 of them I'm working on right now. So also there's we can do 1099 programs as well, which excellent for realtors. So if there's any realtors who are watching this, great program. You basically take your 1099s from the past year or the past 2 years, and that's your qualifying income that we use. We just get a letter from CPA confirming that you still own, you're still operating as that type of employment. We get a letter from your employer that verifies that you're still actually working and closing deals, and that's it. That's your qualifying income. I did 2 of those last year for the first time, and they were probably 2 of the easiest transactions I've ever done. And it
Wow.
was somebody who, on
That's
tax
really cool.
return, would not have qualified.
Yeah, I've never heard of that before,
Yeah.
so
So,
that's fantastic thing I will keep in mind. Um, okay, so question:
yes.
how well is your crystal ball working? Because what I keep hearing people talk about are the rates going up.
we're anticipating that the rates are going to go up through this year.
You think?
The
You
Feds are,
think even with the whole banking situation, they're
yeah,
still gonna raise the rates?
we
Think
think,
so?
well, the Fed is meeting next week, and there's originally was an anticipation of between a quarter and a half percent. So after the whole thing that happened last week with
No.
the SVB, it's now they're talking about just easing it a little bit and doing another quarter percent. I think that in the
Oh yeah,
scheme of everything,
yeah.
they're doing this to curb inflation. I think at some point they're going to have to reevaluate what they're doing because I don't think it's working.
Yeah,
And
it doesn't
I
seem.
think I think they're going to get to a point where they raise the rates so high that they're going to just essentially cripple the housing market. And once that goes, everything kind of follows.
Yep.
Uh, but the anticipation right now is that it's going to continue to creep up. It's not going to be a big jump like we saw last year, but there will be. The good news is the anticipation of everyone that we talk to and people who are a lot smarter than me. The anticipation is like 18 to 24 months. Within that time period, we will see them come down again. So it's actually a great time to buy a house. Right now is a great time, surprisingly, because the rates historically are still relatively low.
Right. Right.
But what you've done is you've eliminated a lot of a year ago, a house went on the market within the first day, you had 20 offers.
Oh,
Now we're
everything was
seeing,
going above ask.
yeah,
All kinds of
and
crazy bidding wars. Yeah.
now, you look at listings and they've been sitting 100 days, 120 days, 150 days. There's no action on them at all. So, and for the first time, I'm closing transactions where sellers are giving credits to the buyers. That was just not a
Oh.
thing for a while. So, we're seeing a period where there's inventory that's sitting, but the buyers are standing on the sideline. And the same comment that we get, I'm waiting for the market to come down a bit. And we did
Gotcha.
some math on it, and I could, and I posted that. And essentially, what it is, if you see a decrease in the house prices while the rates are going up, at the end of the day, you've waited to maybe save $3-4 a month. We did the math on a $1.2 million purchase with 20% down. So if the rates go up a point and the housing prices come down, let's say 10%, the difference in monthly payment was $7.28. So, it's again for people that are really really ready to go and buy. This is a great time because the ones who are
Okay.
not super serious are sitting on the sidelines. So if you can digest those rates for like a year or two,
And then
go
refinance.
buy a house now and get the deal on the house and then refinance out when the rates come down. Just
Yep. Yep.
absorb the higher rate for a year or two. That's the
Yeah.
that's the best thing you can do at this point.
Amazing. All right, Mike.
Um,
Here's my final, and I kind of forgot to tell you this before we went live, but this is like at the end of everything. I always ask if do you have any unusual hobbies or strange talents that you can
Ooh,
share
not
with
really. I
everybody.
mean, yeah, I have the ability to sit here at this desk and work endlessly.
Uh,
you know, it's
that's a,
true though. I mean, that's the one thing, and to any other mortgage people that might see this, I know everybody works hard in this business. We're a small shop, and I'm the production manager for the shop, and I also originate. So, it's just very busy. We just tirelessly work to make deals happen, especially in this environment. It's if somebody wants to do business with us, if I have to sit here till 2 in the morning to work and get it done, this is the environment we're in. It's just to make sure that they're in the position they need to be to put offers in, to make sure everybody's closing on time. It's we're very very focused on our job. I wish I had time for hobbies. I don't know exactly what they would be at this point, but,
oh come
but yeah,
on, you've gone to some cool concerts.
yeah, I do have a
You
cool
do have
concert
some
coming
fun.
up. If concerts apply, I am taking my son up to Rockville in May. Um,
Really, I've been
yeah,
looking at that for a long time.
we're just doing one day. We're just going on Sunday. He's
Is Nine Inch
finally got.
Nails playing at the see that this
It's gonna
year?
be no. It's gonna be the
Okay,
day
is it
we're
this
going. It's
year?
gonna be Tool, Deftones,
Oh,
Incubus, Filter. So I'm like, you get to pick
Incubus is
one.
great. That
Yeah, I'm like,
sounds fun. Maybe I want to go to that, even
it's like
just
if
for
you
one
want to
day.
if you want to pick one day, that's the day we have to pick. So yeah, we'll be doing that soon. So
That's
yeah,
cool.
yeah, it's like I say, it's unfortunate. I guess I don't have as many hobbies as I like, but work has become the hobby. It's
Yeah,
I
and you
actually
work hard. I know. I will vouch. Mike's a hardworking guy. He's always doing the deals.
Yeah, and I work out of my house. I've worked out of my house now for 5 years, so I do have like a legit office set up. It's not, one of those like tray table type things. I have a much better desk than I've ever had at any company I've ever worked at. And it's one of those that, if I have nothing going on in the evening, why not sit down at the desk and, if I can help somebody out or go through their documents or whatever it is, just get it done that night. And,
Yeah.
and that way the next day start fresh and, it's just dedication to the job.
Yeah.
So,
Awesome. All right, Mike. We will put your contact info in out
okay.
there so that if anybody is excited for one of your programs, which I think they should be, especially business owners, absolutely should be, they can reach out. And yeah, I know there. I still see houses, a couple houses here and there in my neighborhood for sale. It hasn't really stopped. So
Well, business is still going on.
awesome. All right, thank you so much, and we'll see everybody next time.
Thank
Thanks.
you.